I want to start off with, in just one or two sentences, since this is the Physical AI Forum in Texas, how do you define physical AI? Because I think these terms get thrown out a lot and we kind of need to understand them. And the second is, how do you define AI in Texas versus other hubs?
I'll start, if that's okay. It's really the convergence of manufacturing, construction, hardware, physical related devices and components kind of converging together with intelligence, with AI intelligence wrapped around or plugged into that. And then one, but in a nutshell. And secondarily, regarding the regions, I think you had mentioned, Texas is an amazing place. It is up and coming. It has decades of previous foundational growth that allow it to be in a place that it is today, which is very unique with power, with semiconductors, with innovation, et cetera, et cetera, et cetera. And it's on the rise fast. Silicon Valley, as you know, Silicon Valley, it's been there for a while. It has the university system connected to its ecosystem, so on and so forth. But I think things are looking amazingly well here in Texas.
See, as an investor, right? Like I'm not a full-time investor, like you, but from a technology perspective or from a management perspective, we look into a couple of things. We look into strategy, right? Like what is the best for if I want to start something here, should I go build versus rent versus hybrid? We look into different, like if we are going to use, if we are fully convinced that if there will be enough consumption, we will build it. If we are doing a trial and error, we will rent it. And if there is a 50-50 there, right? Definitely what we do is we try to go for a hybrid approach. Definitely I see Texas is booming with anything, particularly in the last 5-6 years, right? After COVID, I see a lot of trends. I'm from Bay Area, so I just flew from Bay Area yesterday, so I know what is Bay Area and I can see how things are over here.
Don't judge us by the airport, please.
So there is what I would say. Basically, it's a strategy of build versus rent versus hybrid.
Yeah, being more involved in food and agricultural life sciences, I see that Texas as a whole is very strong in life sciences, biotech and life sciences, but mostly towards health and sort of medical. I see less involvement in food and agriculture. Maybe food is becoming also part of the scene, but less of agriculture. And because I'm in Silicon Valley, the Tri-Valley, the San Joaquin Valley, up in the Napa Valley, and down south, Salinas Valley, there is such huge amounts of agriculture. And of course, my work is still back in Silicon Valley. So I don't see any shortage of presence. Now, back to Texas, I see positive things that are happening. Jim Breyer doing a lot of AI to back his life sciences interest investments. We have John Lonsdale, who are doing software, AI software. Granted, they're not physical software, physical AI, but I think we are getting there. We're just, defense space is a strong, beginning to be very strong in Austin especially, I think. So these areas, medical, defense space, the physical AI is becoming very prominent in Texas.
So I want to go through what you said about like the buy versus rent, and one of the big things people are talking about right now is when you think about the infrastructure build out that's going on, and are we going to have the same kind of telco overhang, the crash too much? And Texas obviously is one of the big ones. You have like Stargate up in Abilene, and even the energy stack, right? It's being like base just raised $1 billion. How do you see the infrastructure build coming out? Are we going to see? Is it meeting the demand? Are we overbuilding? How are we thinking about that?
it's all about supply chain, right? Even if you want to build it, you need to have enough resources. For example, like 3 years back, people want to buy GPUs. There is no GPUs available in the market, right? So it is all about managing the supply chain. If you look into all the government acts that is going on right now, it is all about streamlining the supply chain. Okay? If it is controlled by some foreign sources, then there is a very less chance that we have the control. Right? That is why you want to build it in-house. And when you do build it in-house, you have a better control over the supply chain. So that is one of the things that if you start building more and more manufacturing, if you are going to bring in over here, the chances of you controlling it very well is very high, and the chances of success is also very high.
Well, so in the kind of the embodied AI space, the physical AI space, we are seeing, to your point, bringing out a lot more vertical integration. They're building their own chips, they're building their own data centers. Some of them are, doing their own direct connections with power. So in this space, between Elon's comment, factory is the product. So in the physical AI space, do we see that happening more and more, and that changing the nature of these types of companies, whether it be the margins, whether it be the growth scale, because so much building is necessary?
Definitely yes, right? Like if you look into it, today we are not making chips over here. Okay, fundamentally we are not making it is not being manufactured here. Okay, the designs are slow and steady. It was going outside our control, right? Now if we bring in the manufacturing here, the design over here, not only the hardware part of it, right? The software part of it, right? Like if you look into it, there are other companies now outside of Google or Anthropic. Now they are coming up very, very fast. We need to bring back those software development over here so that you can have a better control. If we do that, yes, definitely we will.
To your question about overbuilding and excessive capex that we're seeing, I think that's the nature of the beast. It always happens like this. You get the FOMO, fear of missing out. And everybody says, oh, if I don't get the industry right now. So I think that's natural. We're overbuilding, and in some regards, we are behind. For example, we have more chips than data centers. We have more data centers than we have power, and so it would all sort of fix itself over the years. I think that's the nature of the
market.
Exactly.
And to really address your question as well, we're looking at the multiple gigawatt space to utilize some of this hardware and to implement some of this hardware. It's not feasible that on the rate of growth and implementation of data centers and needs in the state of Texas or anywhere that we can keep up with the demand of the power, the energy. So something like micronuclear reactors, hydrogen-related reactors, innovation, even applying NPUs in the equation that have a better signal to noise to power response ratio. So on and so forth. All that innovation, I think, is going to help reduce it while figuring out how do we, on the back end, supply the power to do a lot of this on the infrastructure side, because it's almost unsustainable that the building that we're doing and to be able to manage that and apply power to it, it's just the equation. The numbers don't seem to work out.
Well, you see how much the narrative has changed. Is the AI demand for power caused us to turn back on 3 Mile Island.
Yeah.
So the entire nuclear story has finally flipped back to being, oh yeah, this is a great source of power. We need to start building them again and not take 40 years.
Although I think we may not build things at the scale of 3 Mile Island. I think the tendency is going to be to build smaller, more manageable, so that if accidents happen, they're more manageable.
Well, and then it gets back, so the actual narrative, my always big issue is like 3 Mile Island, is that you had the biggest nuclear disaster in US history where no one was hurt, no one was sick, no damage was done, but from a story it killed the industry for 35 years, and it only was until Georgia, I forget the name of the plant, that opened up, and now we have like Allo Atomics here and Valor over in Segundo. Like nuclear is having a renaissance, primarily driven by the things we're talking about here, which is, hey, we need a little bit of power to be doing these things.
Yeah, and the technology is so much more advanced in terms of software to manage the nuclear power plant that I think chances of those high-scale accidents are lower because of the software advancements that we have.
Yeah, I mean, if you look at France and like the sixth or seventh generation that came after this, still on this kind of capital intensity side of the equation and thinking from an investment, are you, because we need the chips, data centers, like just these things require, and correct me if you think I'm wrong, this require a greater amount of investment and the margin profiles are different than the traditional B2B software and everything. And so does venture and investing need to change a bit to be thinking about how to be investing in these kind of deep tech, hard tech type things? And then also, is that even the traditional venture the right way to be thinking about this?
You know, when I look at hard tech, when I look at that type of investment, I mean, we've talked with a number of AI at the edge startups. We're working with NPU startups. We're working with a startup out of LA that is involved in building their own lithography machine, which requires super colliding. There's all
Simple
kinds.
stuff.
I'm sorry. Yeah,
Simple
stuff. Yeah, sure. Only physicists from CERN or in the C-suite there doing amazing things with plasma beyond my comprehension. But the point I'm making is that all that innovation and all that opportunity, I think, is growing and building. In my estimation, it does need the CHIPS Act version 2, a merging government support. All you have to do is look at what other big countries, and I won't name them, is what they're doing, right? And what kind of national investment, and having some version of that to come along the side, along with private investment and ecosystem building and education. So many angles. We're just at the very early stages. I think it's hard for smaller seed or even well-capitalized venture firms to go and be their only investor or coming in big and supporting these massive, capital-intensive projects on their own. And there needs to be either it's a cluster of government and quasi-economic development. I'm not necessarily saying the government needs to write bigger checks, but they do need to come in a very thoughtful way and make this work, kind of like what they did with Intel in a way. And they took, 10% of their from the CHIPS Act.
We need that whole ecosystem.
Yeah.
Sorry,
Go ahead.
no, what else? No, well, we need the whole ecosystem, right? Like starting from making a chip. Lithography is one very fine example. We do not have enough expertise over here today, right? Then making chips.
We need another ASML.
Yeah, there's only one ASML today. There is no second for that, right?
TSMC.
Yeah. So we need the whole stack. Like these are all hardware stacks, right? There's the server manufacturing. Then comes the software operating system, right? Like today we have a couple of operating systems over here, right? Red Hat, Rocky Linux, Alma Linux, so on. We need more operating system. We need more software stacks. We need more layers on the models itself. That basically opens up the whole floor for us. And obviously the support from government, the support from, and we need to have an VCs investing on all those, like what he said right here, that we need more investments on those each and every time.
How many of you have heard the term PROSEC? Not Prosecco, PROSEC. With capital P and capital S. Okay, that's a new terminology that is going to be the buzzword in the next few months or so. It's only beginning to be in Washington Circle used, and that is standing for production security, as a substack for national security. And the current administration is very set on this, production manufacturing. Okay, so we are going to go into production PROSEC, which is very CapEx intensive, which is impossible for the medium to small size VCs to participate. and even big ones, big names, like Longsdale's venture fund, they can't do it by themselves, all by themselves. So it's going to be Jamie Dimon coming in. He announced a $1.5 trillion. Jamie Dimon comes in. The Congress puts in some legislation to advance that. And big name, big boys, usually big boys. There are very few girls in there, to my chagrin. So they would all come together. And I would have to add one line that is very controversial. I have to say it, because I'm old enough to not fear recrimination from my career danger or anything like that. I think the current classical VC model doesn't work anymore. 70, 80 years of beautiful life that they had, the VCs had, it's over. We need to change the models. Andreessen Horowitz is changing, Sequoia is changing their model. So I think it's going to be a very different system for investing in ProSec. From what I hear and read and talk, that's my 2 cents.
Well, I think, I mean, what we all saw during COVID, like, we can have the greatest innovations in the world, and if you can't make them, you can't ship them, you can't get them, what does it matter? And so, like, this is, I think, as you said, like, this entire, the reindustrialization movement, reshoring, these kind of things, to be able to say, we'll be able to have building it here. And it's interesting because when you see what Andreessen is doing, or even like, you know, Goldman buying, Index yesterday, this kind of barbell effect, right? So you have the traditional early stage venture, which I think will still exist, and then the other side that you're like General Catalyst and Andreessen look different than traditional, but then also look like traditional private equity as well. There's kind of a new era coming in, and to your point with you know, JP Morgan coming out with their, you know, $1.5 trillion move. So it'll be really interesting to see that. Because how do you fund things? One, you have that infrastructure play that we're talking about. The other is you also have, back to are we overbuilding, like, you know, Thinking Machines having a $2 billion seed round, which I don't know what that means anymore, right?
I mean, it's like peanuts now.
Right. But then you have, and it's interesting to talk about, like, maybe the talent side of it, because so you had, let's say, Thinking Machines. Thinking Machines had a $2.5 or $2 billion seed round at a $10 billion valuation, and their co-founder just left to join Meta. Like, it's an interesting, like, how do you, even as an investor, start thinking about this level of risk that's going on? Because not only do you have the competition within the startups, but you have the hyperscalers coming in, especially with the types of, and I think we'll see the M&A market open up, but so hopefully we won't see those weird deals that we had with, like, Windsurf and Character, where these quasi-licensed destructive types of things. But it's a really different environment where it's not the hyperscalers being disrupted, but now they're part of the equation.
Yeah, you're right.
So yeah, it's pretty amazing. You know, when you mentioned, you know, the amount that was invested with the individual leaving, you know, to go to Facebook or getting poached or you know, move to another company. There's a lot you can do in the legal contract, right? In terms of the terms, warrants, other creative things, right? That are a little tricky at times, but with that kind of money and that kind of investment, when you think about what OpenAI recently did with AMD, they didn't invest. They issued a warrant, right, with certain expectations over 5 years. That tells you that, you know, you lose your chief science officer or your master designer, or there's some implications there, right? So if you scale that into the venture side, that too is powerful. I don't know what it's like to invest $1 billion or something like that level, but I would imagine those are kind of in the term sheet, the terms that they're using to really limit the risk and the exposure.
Unless you don't want to get in, because there's the trade-off, is the people who give them the cleaner sheets are the ones who are going to get in.
And didn't we have these kind of situations even in the past? This is not the first time. This is not going to be the last time either, right? We had similar situations in the past too. Right? I don't want to go name exactly who did what, but if you look into the last 20 years, there are a lot of funding happened, a lot of seed round, a lot of A rounds, a lot of B rounds, and the founders were being poached. Right? It did happen, right? But market will survive by itself. But we cannot go stop our funding just because of one or two situations.
So what do you think about we were talking about the stack and then the capital intensity, but still there is the kind of the vertical AI layer and like the application layer that is going into physical AI. So you have we're building the robots that'll be, helping with farming, but you also have the companies coming out of the software overlay and being able to kind of run those and being two separate companies. So how do you think about the differentiation? Are those application vertical AI gonna look more like traditional enterprise B2B, or even then, because of the new world of AI, they're gonna be very different? You look at them differently when you're investing.
How is it different when a phone is talking to a server and doing an AI? Different from a robot is talking to a AI, right? Both are the same. There is some micro transactions happening over here on the phone. Same thing happens on the robot too, right? They will do some inferencing. To me, it's all edge devices. Each one of them are doing their own job. One of them is maybe doing something on the farming. Maybe some of them some robots are delivering a meal for you, right? To me, it's almost the same. All these are IoT devices.
Yeah, I mean, these are what you're discussing is sort of looking at enterprise. You're not talking about customer-facing products. But I think where the money is going to be made is companies that are full stack. And NVIDIA is moving in that direction. They're making the hardware, the chips, but they're investing very smartly in all kinds of picks and shovel companies. And so they are becoming a full stack enterprise company. So you would look for companies that would use that kind of a model. As an earlier stage investor, you can't have a full stack company to invest in. So you choose your side, and then hopefully as you grow with them to, run D and E and F and G, you help them become a full stack company. I think that's how I see successful investments would look like.
I completely agree with her narrative there, and I do think that the autonomy market, the physical AI market and such, we will see new KPIs, new measurement elements, new dynamics, new dashboards on what that looks like, kind of like what we kind of converged on with SaaS. And we started looking at certain categories. There are going to be new categories and new measurements. And as a point of example, hardware 4 to hardware 5 in a Tesla, it goes from 1 trillion to 200 trillion computations per second, or something like that. And those types of data points are going to be measured in a new way, whether it's going to be called autonomy on the go, or there's going to be new, I don't know exactly what those are, but I think we'll start seeing that as well. That will add to the stack, right? Either on the top layer or upper and the middle layers.
So we only have a few minutes left, so I want to kind of round it back as we're sitting here in Austin. I've been calling Austin the autonomy capital quite often. One, because we're not only developing and deploying autonomy we've got more self-driving cars than almost anywhere else. You got Waymo, robotaxis, you got Eddie Zooks are coming. We've got delivery robots, we've got drones, we've got it all. And then at the same time, we're also having we're wrestling with what does human autonomy mean in the age of AI. So one, I'd ask, how would you define a place being called the autonomy capital? And also, is it Austin? Feel free to push. Am I overhyping? What do you think?
Yeah, I don't necessarily want to say no, I don't want to say yes either. I will say Austin is a forerunner, right, a leader in that with, what, 6 autonomy from Zoox to, Waymo to Tesla, you name it. And with just like you mentioned, all the delivery bots and such, it's become a use case haven, I guess, for users and maybe the age group. And I'm not sure what is behind it, but I do know that.
I think the regulation is behind it as well, like with New York saying, you can have Waymos here, you can have 8 of them.
Yeah, that's a good point, yeah, right. But there are places like, Miami that are doing cargo shipping from the building top to building top, right? We wouldn't even come close to doing that in Austin yet, I don't think. Maybe it's coming, but there are, Atlanta is also doing the delivery robots in certain areas where they have high density occupants. LA is doing, I think that's where Waymo's based in LA, in the LA area. They have more regions around that whole area. So I just don't know. I think Austin's in a great position, and I think they will, more and more companies and startups and people in the autonomous world will come here to run their trials and trial and error here first. It's like a laboratory in a way to get started, which is fantastic. And I don't think any other city in Texas is doing anything near that, right? So.
Though I am from Bay Area, I had my very first Waymo ride 2 weeks back in Austin. Okay, so definitely hats off to Austin. So it is growing. I also learned. I also saw like what you said. I saw the serve robotics delivering foods for Georgia Tech. I learned that even UT Austin is trying to do some similar program. So definitely Austin is not. It's not that much lagging behind. I think it is catching up very fast.
Yeah, I would say obviously Austin is up and coming, maybe already arrived. I'm old-fashioned, old school. I would call an autonomy capital where they don't have to announce they're the capital of autonomy. That means they have arrived and they don't care about whether they're capital or not. They've arrived.
And with that said, on the same topic, I had some friends visit from San Jose in the Bay Area during the UT game, which they didn't do that well against UT. But turns out they were blown away with all the Waymos and the autonomy. And we went to several places. They're like, wow, this is so cool, because I don't think they get out as much in their region, or they're as familiar with the space as I am. But what they saw was profound, and that's just someone visiting from San Jose, not someone in the high tech. So, well, former Airbnb, those types of HR folks, right? They're not in the technology. So.
Okay. And I think it's fair what you said about like not having to declare. Personally, one of the reasons I am pushing help with narrative and moniker is that I want to kill Silicon Hills and Silicon Slopes and Silicon Beach and all of those. We're going to be pretending to be somebody else versus being, the first principles of what you are.
Yeah, exactly. And I think one thing that can help Austin tremendously to become even bigger and better than it is, the deregulation, the business friendliness of Texas is legendary, right? So Austin is going to be fine. It's going to grow and make bigger. But one thing that is missing is mid-sized VCs. I see tremendous talents, entrepreneurs, an environment for entrepreneurs to thrive, and there's lots of angels money, and then we have a couple of 3, 4, 5, maybe a dozen big ones, Jim Breyers and Lonsdale and other local Austin money, but there is not much 500 million to maybe a couple billion. That's what Austin needs to become first tier. And if we get that, if you don't have to go to Silicon Valley to get our round C and D, then Austin becomes capital of whatever you want to be, and you don't have to even mention it because it's past that.
It's not the next Silicon Valley, it's the first Austin.
First Austin, yes, right.
Great. Well, thank you very much.